Thank you very much for having me here. All right. We all know that money is very important in the economy. We use it as a medium of exchange to trade in the economy. So money is very critical. We need money. And what is very critical is that the functions of money must come first. We should think of the money as a store of value, right? And obviously money as a medium of exchange. I want to stick to those two functions of money. So people hold money if they have faith in the markets, if they have faith in money. That's why you see that if there's any robbery, you hear of stories where thousands of US dollars have been raided from home because people are storing their money in US dollars because they're store of value. Today, Zimbabweans have no trust in the Zimbabwean dollar, clearly because for 10 years or so, Zimbabweans lost their money twice. We lost our money in 2009 when the dollar crashed. So pensions, savings were lost. And we went into inclusive government where we then adopted the US dollar. And from there, we got back trust in the currency, which was the US dollar. And people had faith. And people went into medical aid schemes, savings investments, and also as they went into contracts. You are aware of the engagement which people undertook on properties, banks giving loans, mortgages in US dollars. But in February 2019, again, we went back to Zimbabwean dollar. Those investments and savings crashed again. So today, there's no faith in the Zimbabwean dollar, and people are keeping it in their savings in the US dollars. So that's the challenge which we have. Money is very critical, but the Zimbabwean dollar has become a real case for many Zimbabweans. Now, in terms of the quantity of money, we all know that money demand should be equal to money supply. And central bank has a role of printing money, which matches the demand of money in the market. That's the simple equation which we learned at university, right? In Zimbabwe now, the challenge is that the demand for money, you are asking about citizen loan, has been so significant that the central bank does not have a right scientific model to estimate money demand for Zimbabwe. But the demand for money has been driven mainly by the need to do value preservation against erosion of the same value of money on the back of exchange rate depreciation. So we are seeing even demand for foreign currency, which is quite massive. Don't forget we are using two currencies in Zimbabwe. But at this moment, it's very difficult to determine how much money is being supplied by central bank. If you look at the statement from central bank through what they call their weekly updates on reserve money, we are being told of reserve money of $27 billion. But other components of money which makes up broad money are not coming out. So we don't know how much money is being created by central bank. Clearly because there's a challenge. Central bank, I think, is hiding information. If we are told total monetary base, we'll then be able to know how much money is being created. That is why you have a situation where your national budget is around $437 billion. But your reserve money, which you are being told by central bank, is $27 billion. So where is this other value, about $400 or so billion coming from, if it is not being reported by central bank? That is the distinction between money supply and money demand, and the challenge around money supply in the economy. With regards to the distinction between money value and real value in relation to interest rate, I'm sure you want to talk about real interest rate, also things to do with savings. Inflation at the moment is around 50%, 51.3%, if I'm not mistaken, at an annual level. So in the recent month, we now have positive real interest rates. If you look at interest rates of around 60%, cumulative interest rates, which are being charged by the market. But at some point where inflation was around 837% in July last year, where the situation where the value of money was useless because inflation was higher than the interest rate in the market. So people were investing in hard assets like buildings, bricks, and buying foreign currency. Even today, you will see that farmers, individuals, when they get their money, they buy foreign currency because the values of money are not, it's being eroded every day, not by interest rates, but by inflation and also by exchange rate regime. So you might also want to think about what is the role of exchange rate on the value of money. Companies are doing what is called a replacement pricing or a replacement costing because they would want to make sure that they maintain the same value. This is why you see that there's a war between central bank and the companies and the individuals with the statutory instrument 127, trying to enforce the official exchange rate against a situation where people are getting money at parallel market rates which are higher than the official rate by 100%. So this is where we are in terms of the value of money. You cannot talk of interest rates and ignore exchange rate. Thank you very much, Godwin, for the question. Yeah, it's very true that Zimbabweans want to quickly spend RTGS, but I must put a caveat, not all of them at a moment, because you also know that RTGS are very important for transaction, settling government bills, and also other critical transaction costs. So rarely you find no one spending all the money one time, because you make a loss when you want to buy it back, actually. You even need some little RTGS for airtime, data, things like that. So you don't spend all of it. But there's a significant amount of money which is spent by an individual or an economic agent, which can be even a company, when they get their money in RTGS, clearly because the rates are moving every day. And it follows up to my previous comment where I said the value of money is very critical as a store of value. And if the money cannot store value, if you can't trust that if I keep the Zimbabwean dollars in my wallet, in my EcoCash, in my bank, it will remain the same and you can still buy the same commodities. Look, prices are going up every day. So people will spend it to preserve value and make savings in hard currency. You know that where there's high inflation, if you look at the International Accounting Standard number 29, tells you that people keep their value, their money in strong currency, in assets, and also they also index in that strong currency. So it is true that that's the correct situation on the ground. People are spending, and that is why you see that the rate went up, particularly from mid-year. Why was it like that? Because farmers were delivering maize to GMP. They were being paid at $32,000 a ton. And immediately as they get their money, they went to buy foreign currency. That is the driver of the current rate, which has been going up. You're also aware that the contractors who are doing some roadworks are being paid in RTGS. And if you look at our national budget statement, the portion of amount of money going for capital expenditure is 30%. So out of a budget of close to $437 billion, you are looking at around $150 billion going towards capital expenditure, road network, and things like that. This is the money which is finding itself on the black market as people are buying foreign currency to preserve their value. So that is very true. Then, in terms of what is the optimum velocity of circulation and how this determine money supply. Look, I think it varies from country to country. And if I want to follow your question, is there too much money in our economy? The answer is yes, but to know how much money is in the economy is very difficult to tell. Remember, in my previous comment, I said that Reserve Bank is hiding other components of money. It's only focusing on narrow money, which is reserve money. It's not talking about other money is like which makes up broad money and total money supply in the economy. So it's very difficult to talk about how much do you have too much in a real sense, right? So as a result, it's also very difficult to then say out of this money what is the velocity of circulation in the economy, because you don't know how much money is in the economy. One of the questions from Tendai around what is our import bill? Why are we importing toothpicks? Right. So why are we importing things which you can produce like toothpicks? So from my end, I think there is an animal called corruption. We're importing onions, we're importing tomatoes, vegetables, and if you go to Mbaremsika, where some of this item being sold, politicians have got stands in Mbaremsika, and they're selling these things, and they're coming through smuggling, even if some of these things have got statutory instruments which stops them from being sold in Zimbabwe. So there's corruption, because clearly people make money out of it, because Zimbabwe is now a trading economy. Outside the corruption, you also see that because of current economic challenges in Zimbabwe, it's very difficult to invest in a long haul, in a business, and go through the normal production system. If you have a volatile economy, the most easiest way of saving your money is trading, because you just get your money today, you are buying foreign currency, and if you are not making money by selling Pampers, tomorrow you just switch into toothpicks, tomorrow you're into bubble gums. That is we are now having a trading economy. So in addition to corruption, people would rather want to save their money or try to earn a living by importing. Then the third factor is unemployment, right? Where you have the majority of the people being unemployed, what no matter happens, they become cross-border traders. And when they become cross-border traders, they import anything which they can pounce on, and they sell again. So we are now in an informal economy. So we are trading economy, unemployment, corruption, all these factors combined, they also contribute to a high import bill of useless things. Then you also have absence of a robust industrial policy, which articulate areas of what we are importing. If you look at our current industrial policy today, which was launched in 2019 for a period of 5 years to 2023, you don't see the same policy diagonizing the problem at hand, which it is trying to address. It is not articulating these things which are being imported. And the policy instruments are not clear. It's just aspirational statement that we want to foster value chain and market linkages. There are no targeted policies aimed at substituting imports of this nature. So again, there's dead silence and death of real policies. Now, speaking to the questions coming from Paul, issues around the economic challenges, focusing on the exchange rate market. Right. So why do we have other exchange rate besides the RBZ desired auction system or auction rate? So we all know that the Reserve Bank of Zimbabwe auction rate is not a market determined exchange rate. It's a controlled rate, right? It's a controlled rate. Why? Because it doesn't reflect the fundamentals and the characteristics of a market determined rate. It does not move. It remains where it is since the whole last 12 months or so. And why is the Reserve Bank not floating the rate? Reserve Bank is not floating the rate because they don't have enough reserve currency in the central bank. Last time I checked, before the SDR money which was given to Zimbabwe, about $900 million, the import cover which we had were about 2 weeks. So clearly, from an economics point of view, central bank have no capacity to float the rate, because when you float the rate, you must have enough money to support it. When it goes run away, you do what is called the exchange rate management. You buy, you put more foreign currency in the market, you supply more foreign currency to stabilize the rate. When it goes down, you go in the market, you sell more foreign currency. So we don't have that capacity as a country. So the Reserve Bank deliberately control the rate. They can refuse it, but that's the reality. So when you have price control, we all know the graph in economics. Where you have price controls, you have shortages, right? particularly when you set the prices below the optimum price, below the equilibrium price, you have shortages. And when you have shortages, you have a black market activity. So there's a shortage of foreign currency on the official market. Why shortages? Because the supply of foreign currency, people are not bringing the money in the formal system. The Reserve Bank is only capitalizing on the liquidation of export retention on exporters because it's mandatory. But any source of foreign currency which can come through the bank, either by selling through the formal channels, no one with the right mindset would go and sell foreign currency to a bank at an official rate. So we now have a shortage. When you have a shortage, a black market exists, and people then begin to trust that rate. That's why we have the difference between those rates, right? So I think I've also answered why is it difficult? Why is it not fluctuating? I think I answered that part. So the question is to central bank having power to supply high-powered money and interest rate. And the question is, who is failing at the RBZ? I think government is failing the RBZ. Don't forget that government, there's debt which is accumulating on the back of command economies. We talked about the current reserve money in the economy, 27 billion. Agricultural sector is receiving maize in particular. The government is going to be spending $64 billion RTGS paying maize. If we use the current price of $32,000 per metric ton, and we are assuming that the government is buying 2 million tons, with the wheat now coming out of the farms, we expect that government should be spending over $20 billion. If you look at $64,000 per ton of wheat against 364,000 metric tons coming from the farms. So maize and wheat, we are spending above 80 billion RTGS. So this will obviously result in printing of money, and the government would not want to be charged a higher interest rate. So you see that there's kind of influence. There's no independence of central bank, in my view, on issues of interest rate. But you also see RBZ has no control over money supply because government quasi fiscal activities are influencing money supply because there's need to be money. Money must be created along the way to pay for these things, including construction work. You might remember those who were following in November, end of November 2020, the Monetary Policy Committee acknowledged that central bank is being pushed to print money on the back of government programs, and they made a resolution that government must not continue to entertain command programs because it is forcing them to see creation of money supply, and nothing happened. So government is at play. Let me look at the question from Tendai around are there synergies or a complementary work between Reserve Bank of Zimbabwe and Ministry of Finance? The answer is no. If you follow monetary policy statement from central bank, they are emphasizing on need to contain money supply. I can even go back to 2013. The Ministry of Finance has never been accounting for the money properly. They were in various deficits. That was then Chinamasa as a Minister of Finance, and the central bank was supposed to be financing this deficit to an extent that the funding of treasury deficits by central bank exceeded the statutory limit of 20% of previous budget, and that was quite disastrous, and that is what took us to high inflation levels. Now with the Minister of Finance, Professor Mtuli Ncube, the Minister of Finance is claiming surplus, right? Which is artificial surplus because he is focusing from cash budgeting. When you look at a full consolidation of the budget, if we are going to take into account of these payments which must be paid by government for maize, wheat, cotton, of the total value of money being spent by government would cause government to go in a deficit. So The only difference between Professor Mutulu and Minister Chinamasa then is that Professor Mutulu hide behind a finger and say, I make a surplus. But Chinamasa would then be able to say, I made a deficit. So both of them have continued on the same trajectory of increasing money supply in the system, pushing central bank to print money. And whatever central bank is doing to reduce money supply, to stabilize the rate is in vain. That is why you see that the rate is running amok. The most effective indicator of increasing money supply in the economy is the exchange rate. When the exchange rate shoot up, you'll be so guaranteed that it is because the rate, money supply has been is increasing. And even now, we are getting into farming season. You will see that the rate will continue to go up because definitely the companies which are contracted by government as part of the command program will also divert some of the money. It's been noticed in history in buying foreign currency. They will not take all the money to buy commodities. They will also buy currency. So Ministry of Finance and Central Bank, no collaboration, no complementarity. In actual sense, I would rather want to argue and say that the Ministry of Finance is making life difficult for Central. Is Dr. Mangujga similar to Dr. Gono time in terms of operations and behavior? I would say no, for two reasons. First, the times in which Dr. Mangujga is operating and the times in which Dr. Gono was operating are totally different. The time of Dr. Gono, he was a lone ranger. He was like the prime minister of this country, if I want to say so. He had power, and he had one highway to the office of the president, right? The number one himself, and he was running the show, and he was printing money like never before. I don't think in the history of this economy, I don't think there's anyone who can match Dr. Gono. So the printing press, we know it. I think Dr. Mangujga has never been that careless to that extent. But prophetically and also observing independence of him, I've seen that he's not been getting too much space to be independent and to make decisions as it were as a governor. If it were, I think Dr. Gono had all the freeway to make decisions which he believed in. But Dr. Mangujga, you saw that the previous statement which happened from 2018 when the Minister of Finance came through, you could see that the Minister of Finance was after the governor, Dr. Mangujga. And he would make decisions which were of monetary policy nature, the Minister of Finance, making statements around the operations and the affairs of central bank. So you see there was too much interference into his work, which was not the case with Dr. Gono. Dr. Gono had that political support and was very free. And he failed on his own account, but he tried everything which he could do. And if you check also the decisions coming out of the Monetary Policy Committee, which I have talked about, you will see the desire of central bank try to contain money supply, but the Ministry of Finance and government at large are not listening. Even the statement which he leaked, which we saw in media, where central bank was advising government and changing the prediction around inflation on the back of increased money supply coming from government, tells you that the current governor is a bit cautious, but he cannot control the system. That's my view. It can be debated. So if I was a member of a Monetary Policy Committee, my distinguished role is to advise the bank on their primary function and primary mandate of inflation targeting, price stability. That is the role of central bank. And I would focus on that. And I think that is what the current MPC is doing. But of course, you could see that they have no control over the variables which should guarantee stability of stability. So in this instance, one of the major drivers of inflation in Zimbabwe is money supply. And as I said, November last year, they made a resolution that the central bank, the government must not continue to operate in commanding projects like agriculture, increasing money supply. But who have changed? The government has not changed, and the rate is going. And you then hear government, central bank now trying to explain that they have to manage it, but they can't manage it. So the current MPC is going to fail because there's no government which is going to listen to their advice. Their role will be ineffective because of government appetite to spend. So the impact of current inefficiencies on unemployment is quite, there's a correlation. You know, these currencies where we have loss of value. Imagine you are in business, you have gone into a contract and have signed an agreement in Zimbabwean dollars as an example. Or even if you have not done so, the changes of every day of exchange rate, no one can forecast that and no one can match that. So eventually I'll end up losing businesses. Look at an example of exporting companies which are exporting their commodities and they get their money, and central banks takes out 40% of that under export retention, and the 40% is given to these companies at Zimbabwean dollars using the official rate, which is half the black market rate. So obviously the cash flows of these companies are affected, and eventually they won't be able to run the companies as a going concern, and they close down. So we are here. Remember, don't forget that the currency crisis started in 1997 on the Black Friday, and we are here. Companies have closed, and we also have closed again in 2008. So when you close the businesses, you cannot be able then to maintain jobs. So clearly, the economic decline, which has been characterized by currency crisis, have been the major driver of unemployment. In terms of unemployment rate in Zimbabwe, I think what must be contextualized here is a definition issue. Government hide behind the finger using the definition of unemployment, because if you define unemployment based on economics, you would see that unemployment is the number of people who are actively looking for a job, right? So when Zimstats is estimating unemployment in Zimbabwe, they look at submission to national employment councils, who is applying for jobs, and then that will be the easy indicator of how many people are applying for a job, then they can estimate unemployment. So in Zimbabwe, no one is submitting CVs to National Employment Council because you know it will be only an insane person to do that. There are no jobs. So when Zimstats does not see that, they think people are employed. Yes, they are employed in the informal sector. So I would rather want to say, let us not focus on the definition of unemployment, then say Zimbabwe unemployment is around 11%, because it will then become a paradox to say Zimbabwe has got a lower unemployment. South Africa, which is an advanced economy, well-functioning economy, has got over 25% of unemployment. So are you saying we are doing better than South Africa? No, it's a definition issue. So in as far as unemployment is concerned, from my end, we should define it from a formal unemployment and informal unemployment, but the people are employed in the informal sector. So I would say formal unemployment is around 90%, because if unemployment is around 11%, it means you convert the other way around is correct as formal unemployment. Then in terms of if I were, as an economist, if I were a Minister of Finance, with this current economic crisis, would I fire management of RBZ? Right? That's the question. So what needs to be understood here is that the current crisis of currency issue is not an RBZ only game. It's a collective problem for government. I would want to categorize government as a whole, particularly from Minister of Agriculture, Minister of Finance, as the major culprit who is pushing the rate up. Minister of Finance from the real deficit coming from the consolidated deficit. Then also, I would also say the issues of paying money, a lot of projects in RT just driving the rate up. So you can't then pinpoint that the RBZ problem. Remember also the same RBZ has advised government to say you need to limit your deficit, you need to limit your interaction. Why is government getting into business of funding agriculture? Why they don't allow value chain financing to take place? Why they don't allow companies to do into contract farming with the farmers and strengthen the legal framework to protect the farmer and the contractor? What government must focus on the legal framework, enabling environment, and addressing market failures in agriculture. Market failures such as building feeder roads and also key infrastructures such as water and irrigation, and get out of the business of donating inputs and giving people freebies, which are driving money supply. Because I've told you that in one, you are putting more money in the market. Secondly, you are going to have this buying foreign currency. So you can't fire Reserve Bank management before government address their own mess. So I would want to answer the other part of the question around recommending to the executive and the legislature on RBZ to bring back market confidence and long-term stable domestic currency. So to bring back confidence, you need to understand why you lost confidence. Confidence was lost because people lost their money twice in 10 years. So we need a new currency called confidence. And this confidence cannot come back by Reserve Bank alone. It is a whole system approach where the government system must walk the talk. Remember, even in currency issues, in economics, we say the strength of the currency is reflected in its production capacity. So are we a productive economy? So there's this illusion that people think the central bank has got a central role to contribute to confidence or to currency stability. If you are not a productive economy, you will not be able to have a strong currency. Look at America, they have a strong currency, but they are the most competitive economy in the world. And the competitiveness is identical to productivity, right? So we need to be productive. We need to have structural policies, which are your industrial policy, which are robust, which are diagnosed in addressing the real issues on the ground. Tendai once asked me about importing toothpicks. How are you going to have a strong currency if you are importing Pampers, chewing gums, toothpicks? You need to be self-reliant and you need to build reserves of foreign currency of 6-month import cover for you to have a strong currency. So it's a whole system approach. You need the Minister of Agriculture to play a critical role in production across all areas. We're importing milk right now because we produce about 79 million liters of milk per year, yet we need 120 million, right? We are importing fetal eggs, yet we can do these things. And how do you think your currency will be strong, right? So we need to address that. We need the economic transformation where we are exporting value-added goods. Right now, 69% of our exports are minerals, raw materials. 22% of our exports are agricultural produce, raw materials, dominated by tobacco, which is raw material. Only 9%, so 69% plus 22%, 91% makes the total primary exports. Yet we have 9% now remaining as part of services and manufactured commodities. So how then do you have a strong currency when you have exports of raw materials and you import finished products? So it's a whole system approach which must be addressed. And this cannot help you by firing central bank. And for you to have a long-term stable domestic currency, you must have around 5 or 6 minimum requirement which must be in place. 6-month import cover, right? You must have single-digit inflation, fiscal consolidation where your domestic and the national debt is very low, right? You must have current account surplus. You must be exporting more than what you are importing. This is very critical, right? And you must have a stable exchange rate. So when you bring your currency under that environment, then that will be a stable currency. And if it remains stable and it becomes a true store of value, it will be accepted as a medium of exchange, and you are bringing back confidence. But over and above, you need political stability. You need policy consistency, policy clarity, policy predictability. In about 2 years or so under this new dispensation, we have over 600 statutory instruments. How do you bring confidence in the economy, and which also be transformed to confidence in currency? The question from Tendai around whether it is achievable to achieve $14 billion exports in 2030. The answer is yes and no. If we do the right things today going forward, we have political stability, we respect property rights, because we need to attract investments. We address the ease of doing business. We have a policy consistency and clearly develop the evidence-based policy-making framework. We can exceed the $14 billion exports in 2030. We can exceed that. But if we continue on this trajectory of corruption where people are thinking about the money, Zimbabwe is becoming a trading economy, because starting from trading in currency, trading in all commodities, anything which makes money. So we are not investing in production. We are not investing in power, energy. Right? We get a nightmare of 12-hour blackout. How then do you build the capacity to export? You have a punitive exchange control regime where an exporter will get 60% of foreign currency and 40% is retained by central bank, and they are given this 40% equivalent to Zimbabwean dollars at auction rate. The very same exporter cannot get the foreign currency when they want to. They'll go to the auction system. It takes 15 weeks. Clearly, you are killing the goose which lays the egg. So it will be difficult for us to attain the $14 billion exports in 2030. Then the question is to why is it difficult for this country to resuscitate strategic industries such as Zisco, where I was a chairman of the board. There are many factors, right, which are technical and which are also legal and institutional, in my view. I'll start with the technical, taking my knowledge of being a board chair of Zisco. Zisco, as it stands now, it was established during the Smith regime way back, far away before independence, right? And its technology, the set of technology which was set there, it is not matching with the current technological progress which we see today at the fourth industrial revolution. So even if you go into production today at Zisco, you start it tomorrow, it's going to be a loss-making entity because it's not competitive in its own structure. That's number one, from a technical point of view. Then from a corruption angle, we have had many stories where government officials, top government officials, asked for 10% of the investment as cash kickbacks, right? There was even a report in the public domain by the then Minister of Industry and Commerce, Honorable Bima, that there was a runaway investor who came to Zimbabwe who wanted to invest several billions into Zimbabwe. And he was being thronged by government officials to give them kickbacks. And he ran away, went to Zambia. So we lost an investor, right? Then also at Zisco, you know the story which is in the public domain where Zimcock was given, I would say, close to 90% of the Zisco assets for speculative purposes and asset stripping. And it's something which is in the public domain. And when I was the chair, we terminated that deal because it was stopping any investor to come in and invest in Zisco, even to start the negotiation. Because whom are you talking to? You have Zisco, but there's Zimcock, which is holding 90% of the assets. So it was terminated by cabinet when we recommended. But those are kind of things which stops the resuscitation of these strategic industries. Then the last issue, which is institutional in nature, it's lack of a strategy from those line ministries, particularly industry and commerce. They don't have a resuscitation strategy for specific strategic industries which are failing. So how do you resuscitate when you have no strategy? All right. So the question is to government is forced to print money, and I'm seeing Perpetual saying, "Are you sure government is printing money?" And he's asking Paul. I think it's only fair to say government is printing money in two ways. First, if you look at the current quarterly targets by central bank, they are targeting increasing money supply by 22% per quarter. Economists have not discussed this issue and looked at its implication on money supply. If you look at 22% increase in money supply every quarter, and we're 4 quarters in a year, direct arithmetic, we're talking about 80% increase in money supply in the economy. But when you look at this 22%, it's a cumulative, it's a compounding one. So it's more than 88%. It could be 95% increase in money supply, close to 100%. And that is why you see that our reserve money, which was around 16 billion earlier this year, is now 28 billion dollars as of end of September. It's an increase in money supply. They are printing money. So I still feel that 22% increase in money supply per quarter is a lot. It's a higher target. It's a higher threshold. So central bank on its own is printing money. But also to say that government is also printing money, but we don't know how much they are printing. Remember, I said we don't know the total monetary base because central bank is only giving us reserve money. The total broad money supply, we don't know it. But we are very clear as economists that they are printing money because that is the only source of money they can use to fund the command agriculture and also to fund the payment of farmers. And I was giving you those several billions of dollars. So they're printing money. Then the question is, Dr. Mangoja going to resign? Or if he resign, is it going to give a dignity to government to stop printing money? Look, this government does not respect resignation. It's nothing, does not mean anything to them. In fact, they look at you as a coward. During Mugabe time, remember Nkosana Moyo resigned, and remember Mugabe saying Madoda Sibile. So he never give him respect. I resigned from Zisco. You are looked at as a sellout, so that they don't respect resignation. Let me answer the question from Tendai around the auction system. What needs to be done, and where do I see the rate by end of year? So the starting point is to understand what is causing the exchange rate to run away. So the summary which I provided in my discussion is that government programs are driving the exchange rate to run away. So what needs to be done is to see government exiting the command programs and allow the market to finance agriculture, to finance any other programs, particularly anything to do with the cotton, and as we see even in tobacco, although there are issues there in terms of profitability. But I think what is needed to be done by government to address market failures in market economies is to put a proper legal framework to make sure that there's a fair return on investment for farmers and the contractors. That is what needs to be done. Then the other driver of exchange rate is the backlog of foreign currency, which is owed to companies which bid at the auction system. As long as the government is taking 15 weeks, which we are being advised by CZI, as a backlog for foreign currency, business will continue to go to the black market to buy foreign currency. And when they do that, there's an increase in demand for foreign currency. Then the one factor which must be taken by government seriously is the new demand for foreign currency. The demand for foreign currency is not only from importers who want money to import critical requirements. It's people who want to preserve their money. So we need to continue to rein in inflation so that the true value of money is retained. And bring confidence slowly to the public for them to avoid running to the black market to buy foreign currency to preserve their money. Those are the key issues which I think must be done. Right. The question is to where will be the exchange rate by the end of the year? It's a very critical one. It's only God who knows. I think it will be wrong from my end to predict, to say it can be 300, it can be 500, because there are many drivers. There are certain things which we don't know. For example, we don't know how much money is being kept away from the public. So it is difficult then to be able to tell that where will be the exchange rate. But what I can tell this meeting without any shadow of confidence is that there will be continuous run on the parallel market rate, and the government cannot stop that. Why continuous run? Because we are starting the farming season. There will be more money again going to the market to support the farming season. Farmers who are bringing their wheat are going to be paid over $20 billion. That the man will find itself on the parallel market rate. And that combined with the existing money supply, which is in the market, which we don't know, will continue to see the rate running away. And when it happens like that, it becomes a self-fulfilling prophecy where depreciation of currency causes depreciation of currency as people continue to buy foreign currency to hedge against loss of money. So what must be done? Because government has no appetite to stop command farming, to stop funding various projects which are causing money supply. Whether government likes it or not, I see government being forced to dollarize. We go into US dollar. And on this basis, I think it's only wiser for the Minister of Finance to do his budget in US dollars, because I don't think we'll be able to use Zimbabwean dollars in 2022. Thank you, Paul, for the question on broad money creation. Right. I think what is very critical for me is the question of money demand being equal to money supply. And in this area, you would want a situation where central bank prints the money which matches money supply, and which gives you an equilibrium. And at that point, you don't have much challenges of inflation. I would rather don't want to see government being accommodated in this area of money supply. That's my view. I'm being honest, because if government comes into the money market, there's always a natural challenge of crowding out factor, where government will take the money which is supposed to be used by a private sector for production. And how is government budget going to be financed? Government must stick to their own source of revenue, which is taxes as a major driver of government revenue, and of course development partner support. And if government want money to smoothen their budget, then they should then be able to borrow from government, from RBZ, from the market. But their borrowing must not exceed 5% of gross domestic product. It should be around 3%. And this could then be can be through treasury bill as instruments. So from my end, so if you talk of 3%, which government might want from the market, it's a very small percentage which government might want. So the money is for the market. It should be determined by demand for money. I thank you, Paul, for the question. If I was in government, if I was in control of the situation in government, I would not go for dollarization, because it's a very painful journey where you have tight liquidity challenges. It affects your competitiveness. And I'm assuming that I'll be in control of the situation in government. I'll be assuming that there's no corruption. I'll be assuming that there are good policies which are going to be driving production. I'll be assuming that there will be market-led policies which are supported by strong institutions, right? And I would want to sustain the Zimbabwean dollar, because it becomes a soft currency it helps us to be productive and be competitive. But because we have an animal called corruption, and the government which is not adhering to the basic tenets of macroeconomic framework and policy framework. So I would rather say that if you cannot manage this situation as we have gone now, we'd rather go for dollarization. Because clearly it will kind of bring stability and give government time to really think about their next course of action, particularly redirecting the economy on the growth trajectory. And hopefully they would have learned a lesson on chaotic policies, what you can buy out of them. So that is the basis of my answer to this issue. But out of 33 countries, as far as I remember, if I'm not mistaken, all those countries never went into dollarization, including Zimbabwe, by choice. It was by economic reality. It was by force. You also need to know that even Mutuli Ngwe himself, he forced the Zimbabwean dollar to come in June 2019 without the right minimum conditions, which I spoke about earlier. But by March 2020, as expected, we warned him against that. We went back again to Zimbabwean dollar, to US dollar, to dollarization. They've tried now to expand the level of currency trading in Zimbabwean dollar, and there's been quite the increase in the component of Zimbabwean dollar in the market through printing of money due to appetite to spend in the economy by government through the command programs. So again, this is taking us back again to dollarization. So it's a vicious cycle. So that's why I'm saying I would not want to recommend, but I'm simply saying this is the reality. The rate is not going to come backwards. If you check even the meeting which central bank had with the business yesterday, there's nothing which came out of that meeting. That statement by the central bank governor that we've agreed, there's nothing they've agreed which is concrete. How do you say that there was a resolution, there was an agreement where central bank will say we are going to clear the backlog? Do you want a meeting? Do you want to have a meeting with the business to tell them we are going to clear the backlog of 15 months just to clear the backlog? What sense do you make out of the agreement, that the resolution that the Retailers Association of Zimbabwe, whichever it is going to chase away people who are loitering on their shops, not to transact in foreign currency? Is foreign currency being transacted in the shops alone? It's being transacted in Magaba. It's being transacted everywhere in Zimbabwe. It's being transacted even in houses, in homes, where people are just changing money via the EcoCash. And you have over 6 million people transacting in foreign currency every day. So how do you think that you can police people say don't transact? How do you think the agreement by a business sector that they are not going to breach the statutory instrument 127, which requires them to follow the formal market rate, when the price regime is now characterized by black market rates, and there are a small portion of the economy, the bigger, you are meeting 15% of the economy, 85% of the economy is out there. The government is meeting their own constituents. So what is clear to me is that dollarization is coming. It's not something which I can recommend. The market is the best judge. We have failed to run our policies, and once you fail to manage currency issues, you go into dollarization. That's my view. Thank you. The economy this year is expected to grow by 7.8%, according to the Minister of Finance. And the World Bank is expecting 3.1%. IMF is anticipating 6.1%. So by and large, if you look at those three institutions, you can agree with me that there is a positive trajectory on the economy. It's growing. But you must take note that last 2 years, 2020 and 2019, the economy was in recession, was contracting by an average of 10% per year. But for me, where I sit, the growth rates which we are talking about this year mean nothing. It's just a number. It's a number because remember last year we were in a negative territory. So when you have a positive growth, it looks like you are making progress. So it is pampered by politicians as a success. Yet you are coming from negative. So any incremental gain in production becomes quite significant. That is why you see we might grow by 7.8%. We might actually exceed to 10% growth rate. But it doesn't mean anything to people's pockets. The major indicator which you must look at is the poverty level. In 2018, 29% of the population was in extreme poverty. And when you look at extreme poverty, according to World Bank indicators, you're talking about a population which is failing to meet basic needs or living on a less than $1.90 per day, right? So to date, according to World Bank, people in extreme poverty are now 49%. We've added 20% on top of 29%, right? We are kind of closer to doubling the number of people in poverty in the last 2 or 3 years or so. This is the indication of this new dispensation on how they are failing to manage the economy. The major indicator is extreme poverty. And that is quite bad. And if you look at the people who are earning salaries below the poverty datum line, it's the majority of workers in this country. So you can be in extreme poverty when you are going to work. So I don't look at growth rates as something to celebrate in this country because it's not a shared growth. It can only be a shared growth when the majority of the people are having access to basic needs, they're having access to food. You cannot have a situation where 49% of the people, 7.9 million people, which is more like half of your population, are in extreme poverty. It doesn't make sense. So don't pay attention to growth rate because now if you are an investor, you would think that there's now money in Zimbabwe because the economy is growing. And the people are poor. If this growth rate was in South Africa, it would mean sense because it is a solid economy. It's coming from a higher base. In our instance, we're coming from a lower base. So that is the challenge which we have about this growth rate. So it's going to be a trend, but to me, it means nothing.